Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, September 30, 2024. We're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, we have an end of the month and an end of the quarter wrapping up today, September 30, 2024. And lo and behold, for about 10-minute candles, the market, after making a bottom, went up to rally into the close in the name or spirit of painting the tape into the end of the month/quarter. Why don't we just maximize our money manager bonuses? It's more of an old wives' tale, but certainly makes for good conspiracy theory discussions. Getting back to the daily chart, we're in an uptrend. The trend is your friend, and she is currently climbing, slowly but climbing, what's called the wall of worry. What happens when the market climbs the wall of worry? Eventually, somebody/something comes along and starts tugging at some bricks down below. Eventually, we're going to get what's called a rug tug event. What's a rug tug? It's a rug pull event. They're going to pull the rug out. They're going to correct the tape a little bit. So our job is a couple of things. A, not to jump the gun. We had a long, drawn-out discussion in the live room today about this very topic, about jumping the gun. What you believe, or I believe, or Cousin Jimmy believes, what should be happening in the market based on world events, geopolitics, U.S. politics, Federal Reserve, inflation, deflation, masterflation, Middle East conflict/war, inverted, reverted yield curve, recession looming, soft landing, hard landing, all that stuff. The market doesn't give a hoot. It's climbing the wall of worry. There will be something gets attached to the market that says, hey, let's correct a bit. And when and if that does happen, where are they going to correct a bit to? Without getting too granular, without running 15 different formulas, they're going to run a correction operation right to this zone over here, the last breakout area. They kind of did it once when they broke out. That's a one-day wonder. They're not done with that. They're going to run a test once again for the second time of the most recent breakout area, the all-time high from before. Now we have new all-time highs. They come back to double check at the former all-time highs. That's the way the market works. Might want to write that down, put it on a sticky note. What are we waiting for in order for that to happen? We're waiting for a sign and or signal of a trend change. Now, those are items that are taught in the course, Lazy E-mini Trader, but in short, we're looking for Mrs. Market to give us a clue that says, hey, look, here's an intraday reversal. Hey, look, here's a spike high, tail candle, doji candle on volume. Here's something to trade against. These are two examples. We have a tinfoil hat event this week, believe it or not. Here it is, right from NASA's website. Annual solar eclipse, October 2, 2024. You can look it up for yourself, study it if you like. This is one of those that I like to call a tinfoil hat event. Doesn't mean the market will turn, doesn't mean the market will trade up into or down into those events, but if they do, we pay attention. That's it. It's a point of reference. We like to tie it in with a whole bunch of other stuff that we have in our toolkit. We have a potential strike on the East Coast with the port. We don't know. Did they make a deal this afternoon and that's why the market rallied up? We don't know. I don't know at the time I'm making this video. Maybe they did, maybe they didn't, but that's something else looming. We could put that as another brick in the wall from a short-term perspective. What about inside the numbers today? Anybody make any money? If you did, post it under the video. If you're learning, if you think this is a place of value, there's people out there, and it's brothers and sisters, there's people out there looking for help. There's people out there that are looking for a place that they could rely on to actually learn something about how the market works so they can make money in the market. If you think this is that place, post it under the video, post it in the comments section. We're going to see how the market acted and reacted around those numbers. What I urge you to do is pause the video, read the notes, and go back to the chart to double check the work. We got some important stuff going on. 571.20, remember that one. 570, it's actually a spike below. We'll call it 569.85. This is all put up here at 0 dark 30. We'll call it 6:30 a.m. for argument's sake. We got 573.40. We've got 572. You can't be a stubborn mule with the market. You have to adjust as the market moves. Stubborn mules get kicked in the ass. Or they are the ass. Which one is it? Let me hear that one posted under the video in the comments section. Write these numbers down for a second. Put them on a sticky note. Put them on a notepad. Put them on your hand. Write them down for a second. Let's take it from the bottom. 570, 569.85. This one started in the pre-market right around 7:50 a.m. Eastern Standard Time. How about 571.20? How about the importance of that number? Watch this. 571.20, blue horizontal line. Look at all this. This is pretty incredible. You could see where while below, it's resistance. As soon as they get above, it becomes support, and they bounce off of it. They eat time off the clock, building energy to do what? To first shake out the people trying to ride it long by dipping lower, immediately reversing back, and finally going higher after eating time off the clock in a bullish, flaggish kind of fashion. It's a classic little shakeout before they go type of move. And you could see they came back to run a test of it later in the day. They got below it, and this is what we became the pivot later on. You'll see it in the notes. Then they came back to test it. They failed. They got above, and they took off into the close to paint the tape a little bit. Remember that one from earlier in the video? 571.20, pretty important right there today. Let's check one more. How about 572? That was our early pivot at 0 dark 30. And there you see what happened to 572. That was resistance, which you'll also see in the notes in a moment. What's important to realize is all this stuff is put on the board before anybody's even brewing a cup of coffee. Remember, pause the video, read the notes, go back to the chart to double check the work. Now watch this one, 7:45. Well, as the morning ticks on and price leaks lower, some adjustments are in order. 569.85 is important. You saw that happen already at 7:50. We were talking about a spike of 570. Refining the number just by a few pennies is no big deal. But here is somewhat of a big deal. Below that on candle closes begins to open the door for the next leg down toward what? 568.30. Really? How you doing? 568.30 within pennies of, yes, low of day. You can't make this up at 7:45 in the morning. The point is there are certain numbers that are important at certain points in time, certain days, certain weeks, certain months. It's what we call a rotating and fluid environment. Remember, pause the video, read the notes, go back to the chart to double check the work. It's all in here, everything you need if you're an S&P or would like to be an S&P trader during the trading day. Options, futures, exchange traded products, it doesn't make any difference. They're all directional trades. So by 9 o'clock, we're saying we've got the thieves in the morning. They did the spike of 570 deal. Okay, fair enough. We know below that, below 569.85, the door opens for the lower stuff. We saw that happen later. And for the flip side, the bulls, they have to get back above 570.42 and stay above, which will open the door for 571.20. There's your Monday morning schematic, 571.20. All right, how about 9:31, right when the market opens, 571.20 to 572 is a target and overhead resistance zone. And there it was on the board. We discussed it and took the trade in the live room. It was a short scalp with potential. They ended up giving us the scalp without the much more potential. What they did was they ran a test of low of day after hitting the number, and they couldn't get above, and therefore they came back down. Ran a test of the opening range low. We were exits. We had trailers on, but you don't let the trailer go bad on you. So therefore, we take our base hit and or double, and we put it in our pocket. And what we say in the live room is, get them on, get them over, get them in. That's how you score runs. Base hits put you in the Hall of Fame. Trading is no different. Pause the video. Read the notes, go back to the chart, and double check the work. I gave you the highlights. I showed you where the numbers were early in the morning. I showed you the first trade of the day right out of the gate. Everything else is in here. If they're above 572, where do they go? 573.40. And even higher, including the end of the day jam session. Nothing doing with stocks on the move. We had GM, NVIDIA, and Baxter. None of them hit their entry objectives, so they're just no trades. What's going on over in Camp IWM? Any material change with the small cap index? Not really. Up 0.25%, 56 cents. Decent day. Above all the moving averages. Trend is your friend. And we can use last Wednesday's low as a bogey. What does that mean? That means you give up, or if they give up last Wednesday's low, it opens the door down into the moving averages and even teetering on the entrance to no man's land down here around less of a magnitude perspective is Irene-ish. On the flip side, you get above Friday's high and it's going to open the door to the recent highs, and you get above the recent highs and it opens the door to the July highs. Anything materially change on the weekly chart from 2 weeks ago to last week? Absolutely not. We'll let it play out a little bit this week before we make an assessment or need an assessment of the weekly chart. No change. Basically, you have a big time breakdown candle high from a weekly chart perspective. They ran a test in the neighborhood, the vicinity. They kind of not got to the high, not even close to the high, but they were in the neighborhood. We'll call it the top 25, 20%, give or take. But they didn't really get rejected, so now they're eating time off the clock. So what does that mean? Well, currently they're trying to build energy to make another run higher, to maybe run a test of the high of the breakdown candle, or to bust through the high onto another place. That's the assessment of the weekly chart. And keep in mind, when I go over stuff like this in these videos on a weekly chart, we do the same thing from an intraday chart on smaller time frames in the live room, and all over the place. All charts act and react the same way. Doesn't matter what the label is, small caps, large caps, a stock, a commodity, makes no difference. Weekly chart, 5-minute chart, 15-minute chart, hourly chart, makes no difference. All charts act and react the same way. How you put it all together and assess the information separates the men traders from the boy traders. What about the folks down at the transportation department, comfortably above the trend line, the triangular top trend line, comfortably above? So we'll say this is a breakout in the making. So from here, it seems pretty obvious. They're around these highs. You could see it here. The next thing from a logical perspective, and this doesn't mean they're going right here tomorrow or next Tuesday. The next big picture thing from the weekly chart are these highs over here. There will be resistance areas and points of interest in between, and those are for the intraday type trading opportunities. And when you pull back the curtain or peel back the onion just a little bit more, you go to a monthly chart, you could see that there's a pretty good case that you have one of these triangular pennant formations, if you want to reference the textbooks out of the Joe's Indicators School of Library books. But you could see after the high we just talked about here, that becomes a natural test type of place. Then what do you have? Well, then you have what's going on up here with this pivot high, big tail, decline. They're already back up here. They're breaking out above this trend line. This is all important information. It's up to you how you want to assess the market. I say this all the time to the folks in the live trading room. It's what makes a market. We all look at the same information. We all have the same monthly chart opportunity to look at. We can all look at the same weekly chart. I could take the lines off. We're all looking at the same thing. Yours might be a different color background, different color candles. But in a sense, it's all the same data. But we're going to come out with different conclusions about what that data represents. That's what this business is all about. That's one of the things, or many of the things, that we work on every single day in the live trading room. What about the Q people? Well, you know what that 487.63 represents. Former breakout area, stay above, she's bullish. Came in to test it today, closed well above it. She's bullish, in an uptrend, above all the moving averages, same routine. Now, you still have a lower high situation. You have highs over here, and you have a lower high here, but you had lower highs here. That's no longer the case. So once upon a time, you had a trending situation. She broke out above that situation, so now that situation is no longer the situation, but you have a different situation. And that's the way the market works. That's the fluidness of having to adjust to what the data and the chart and the charts are saying. Anything wrong with the weekly chart? You're firmly in an uptrend. You're in a bullish tape above all the moving averages. There's nothing wrong with this tape whatsoever. Notwithstanding, she can, at any point in time, have a pullback. And let's have a pullback discussion for a second. Before, and I went back to the spider because we're used to talking about this before, I said, hey, look, you still have this former breakout area. Well, look, by coming down to run a test of that place before, and this is on the 20th of September, okay, they still have an open gap below. So you got a gap all the way down here at 561. So let's forget about the gap for a second, but this is the entrance to no man's land. So let's just say, for argument's sake, rounding numbers, the entrance to no man's land is 565. Where's the market today? 573, 574. That's almost 100 S&P handles. They can come down and test that in an afternoon, in a morning, anytime they want, overnight, in 2 days, whatever, and then bounce off of it and stay bullish, come down, fill the gap, test the moving averages. Something else may be developing. Obviously, we'll talk about it and cover it when and if that does happen. But just the point of what to watch out for, don't get scared away. And this is the point. Don't get scared away from here, give or take, 100, 125. S&P handle pullback is 10 to 12 or so dollars in the SPY. Nowadays, that's a normal garden variety pullback and would be a natural place for Mrs. Market to run a test of. You might want to write that down and put it on a sticky note. Anything going on with the XLF, the financial complex? Up a little bit today, 17 cents, but above all the moving averages. So what am I going to say? Repeat after me. I don't even have to say it. You say it. Uh-oh, what about Smashmouth? Why is that down? Isn't that a good proxy for the tech space, down $2.50 today, or $2.29? Why is it down? Should we be nervous? Well, you should be on guard when the SMH is down and everything else is up, for sure, because it is a good proxy for the tech space. Now, we had this line at 253.32. That was a high from here. We talked about it last week. So what did they do? They ran a test at a high, and now they pulled back from it. They filled a gap. That was an open piece of unfinished business. There's a gap over here. So they filled that gap. They pulled back into these moving averages. It's normal garden variety market activity, but yet we will heed the information. The information is the SMH is weak, and if that's a shot across the bow, a flare up in the air for the tech space, and if the tech space is going to crack a little bit, then everything else is going to crack also. That's just the way the market works the large majority of the time. We all know that. Hey, by the way, have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible, and that is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.